Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 2nd of March 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you are listening to or viewing this podcast anywhere other than on our iTunes or YouTube podcast channel, then please make sure that you subscribe. In that way you will be notified whenever I publish a new video. Let's take a look at the markets, and let's start, as we have done for the past several weeks, with the S&P 500. Now here is the analysis that I have been speaking about for the past 2 weeks, which, as you can see, places the 20-week cycle trough over there at the beginning of February, on the 2nd of February. And I've discussed this in previous weeks, so I won't dwell on that, but I think that this is a very viable analysis. It's not absolutely, definitely, certainly the only analysis that is possible. In fact, if you take a look at the foot of the chart, you will see there several pins, which means that I have influenced this analysis. There's 1, 2, and then there are another 2 of them over there, so 4 pins altogether. That means that I've had to exert my influence over what Sentient Trader is doing here, which is often a bad sign. Not always, of course. Sentient Trader will sometimes get things wrong, and you have to help it along, and you have to tell Sentient Trader what you think is happening. But I've learned over the years, I've been humbled by my own creation, and I've learned that very often Sentient Trader gets it right more often than I do. And so the fact that I've had to do all that pinning might be a bad sign, and it might indicate that in fact that 20-week cycle trough didn't occur there. But it certainly looks very likely to me, and as I discussed last week, the price action that we have seen since then makes it look very likely that that was indeed the 20-week cycle trough. Here you can see some very good interactions between price and the FLD. There's the A category interaction as price bounced out of the 20-week cycle trough at the beginning of February, and here surrounding the 20-day cycle trough we can see price coming down to touch the FLD, which it did about 10 days ago, and then it bounced back up again. So of course that was the B category interaction as price came down to touch the FLD, and the C category interaction as it bounced back up again. Now we are expecting next, according to this analysis, a D category interaction as price comes down into the 40-day cycle trough. Now here's the nest of lows for the 40-day cycle trough. You can see it over here. That 40-day cycle circle and whiskers is really quite long. That's because we've had a lot of variation in cycle wavelength recently, particularly in this analysis, and so you've got a really long circle and whiskers there, indicating a very long period of time in which that 40-day cycle trough could occur. But of course the important thing is the nest of lows, and that nest of lows, as you can see, is pretty much centered around this week. So that means that we expect price to come down into the 40-day cycle trough sometime this week. So if I draw it here, it would look something like that, and then of course it'll bounce up again. So last week I was speaking about the opportunity for entering into a short trade, which would have been either a D category short trade or an F category short trade if the other analysis is the analysis that turns out to be the true one. And now that D category or F category short trading opportunity simply didn't manifest. Remember, of course, that a trading opportunity is when price is a little bit away from the FLD. We have the opportunity to make a trade when it interacts with that FLD. Now, if price doesn't interact with the FLD, then the trading opportunity didn't happen, or it hasn't happened yet. As you can see, it might be happening today, because you can see prices come all the way down to that FLD. That FLD today is at a level of about 2100, and the low price in overnight trading so far in the S&P 500 was at about the 2100 level. And so it's possible that that interaction is happening today. Now, am I still interested in this short interaction? You must remember that when we're trading using Hurst cycles, as time passes, the trading opportunities become sometimes less appealing, sometimes more appealing. They become better trading opportunities, or they become worse trading opportunities. This particular trading opportunity, in my opinion, has lost much of its appeal. I'm not very interested in this trading opportunity anymore as a short trading opportunity, and I'm going to look at the other analysis in a minute so that we can compare the two charts, because on the other analysis it is still a potentially interesting trading opportunity, but here it isn't, and let me show you why. We calculate the target on the basis of projecting from the previous high. Now here's that previous high. I'm not going to have to work out the exact level because we can just very roughly draw it on the chart here. Now if price does cross below the FLD today, and remember that of course on a Monday I never set stop orders over the weekend, because on a Monday there's often a bit of volatility. And price will come down to the FLD sometimes, and it didn't really mean to. It was just as the markets were settling into things after the weekend. And so if price does cross down below the FLD, then our crossing level will be, of course, the level of the FLD. So that's our crossing point, we normally call it, and this would be our initial stop loss up there at the level of the high. And so where would our target be? Our target is an equal distance from the previous high down through the crossing point down below. So our T2 target would be somewhere over here, and I'm taking it over to the edge of the chart so we can see the level. That target would be somewhere around about the 2090 level. I'm not looking at exact numbers here, but the point that I wish to make is that that's not really a very interesting trade to me anymore. If price had crossed down last week, and from that high that was formed on Wednesday, if it had crossed down somewhere here on Thursday or Friday, then of course we would have had a T2 target down here, and that would have been much more interesting to me, because there's a greater possibility of making a profit out of that. When you get a very small level of profit from a potential trade, then it loses its interest, in my opinion. And very often D category trades come down and they fairly accurately achieve their targets, and then they bounce back up again. And so this trade is no longer very appealing, and so the trading opportunity that I was looking at and thinking about and interested in last week is no longer an interesting trading opportunity. And you have to be very careful when you're working with Hurst cycles or any kind of cycle trading, that as time passes, of course, the trading opportunities change. So you should never view a video that I make several weeks after the fact, for instance, and assume that the trading opportunity I mentioned several weeks ago is still the trading opportunity I'm interested in taking. This trading opportunity has lost its appeal to me, the D category trading opportunity. I think it is quite possible, because of all the bullishness in the markets, I think it is quite possible that price will come down to the 20-day FLD and not cross very cleanly. It might sort of track along here a little bit and then go up again, which means that in fact the next trading opportunity that I am interested in is a long E category trading opportunity. You should always look ahead to the next trading opportunity, and although the next opportunity in theory is the D category short trading opportunity, is not a very interesting one. The E category long trading opportunity, however, I would be interested in. As you can see, the bull is still strong in this market. It has carried it up for you can see 28 days. For 28 days, this market has been buoyed upwards by the bull, and I wouldn't be surprised to see a fairly subtle 40-day cycle trough form roundabout now, in which case the next trading opportunity would be our E category trading opportunity as the market goes back up again. Let's see if we could use the 10-day FLD as a means of getting into that. Not really, although you very rarely use the 10-day FLD to get into into an E category long trade. It's interesting just to look at it on the chart there, and you can see that 10-day FLD doesn't really give us a level that we can use to enter into a trade. So the only level that we potentially have available to us at the moment is, of course, the level of last week's high. And now the level of last week's high was 21.17. So we could potentially, if you were feeling aggressive about this, we could potentially enter into our long E category trade at the level of last week's high. That's if you're feeling fairly aggressive. Most traders would wait until price does drop down below the 20-day FLD. If it doesn't do that, you've missed an opportunity. That's too bad. A missed opportunity is not a losing trade. And so if you've missed the opportunity, well, that's too bad. But so most people would probably wait for price to drop down below the 20-day FLD and then use the level of the 20-day FLD to get back into that trade. You should be cautious of doing that when the level of that 20-day FLD is so near the level of the recent high, because price will quite often sort of come back up to the FLD, but without actually exceeding the previous high. And so even if price does drop down below the 20-day FLD, I might consider making an entry at the level of the previous high. Of course, bear in mind these comments only apply probably for the next few days, next 2 or 3 days at the most. If price does come down fairly low, down below that 20-day FLD, then I would definitely use the level of the FLD to get into the long E category trade. Now let's quickly take a look at the other alternative for the analysis. Here is the most likely other alternative in my opinion, and as you can see, it shows that the trough at the beginning of February was a 40-day cycle trough. As a matter of interest, some people have said to me, well, why, let me see if I can draw this, why isn't the 40-day cycle trough over here in the middle of January, and this is then the 20-day cycle trough? We'll measure bars in a moment, and I'll show you that makes perfect sense. And in fact, let's do that now. So if we measure the bars from that 80-day cycle trough, here at 31 bars or 31 days is an ideal place for a 40-day cycle trough. So let's assume that's the 40-day cycle trough. Then 17 bars later is the perfect length for a 20-day cycle. So that would be the 20-day cycle trough. But then, of course, the 20-week cycle trough needs to occur at the next 20-day cycle. And as you can see from the bar count there, it has already been 28 bars. Now, 28 bars is an impossibly long 20-day cycle. And so what happened to that 20-week cycle trough? Okay, it's just simply disappeared. It just simply didn't happen. So yes, a viable analysis is that this is the 40-day cycle trough over here in the middle of January, and that this is the 20-day cycle trough here on the 2nd of February. But then where is the 20-week cycle trough? It hasn't really occurred. You could argue that the 20-week cycle trough occurred over there. Well, yes, but it just doesn't look very good, and I don't really like analyses that look like that, because that's not really a very impressive 20-week cycle trough. Price moved down for all of one day to get into that trough, and that just doesn't really make sense to me. And so I'm more inclined to say that the other analysis that we have been looking at is still the correct analysis. Or, of course, the 40-day cycle trough is here at the beginning of February, as is shown in this analysis. Now, what does that mean? Well, that means that we are still looking at an F category short trade as price comes down into the 20-week cycle trough. So how do we deal with this ambiguity? Because the other analysis that, in my opinion, is the better analysis and is more likely to be the correct analysis, indicates that the short trade is not worth taking anymore, and we should be looking at the long trade next. But here in this analysis, which is still a valid analysis, it's still viable, we would be looking at an F category short trade next. Well, the first thing I would say is that I wouldn't jump straight into the trade at the level of the FLD, because the level of the FLD this week is getting into the territory of last week's trading. And that's always slightly worrying, because basically if the market does nothing and simply sort of keeps dawdling along at this level, then it'll end up crossing that FLD by default. Now that's not the kind of action that I would want to make a trade on the basis of. If we are looking for an F category short trade, for price to come down into a 20-week cycle trough, which is expected sometime this week basically, or within the next week or two, then I would be looking for a fairly strong move. So in fact, I would not enter at the level of the FLD. I could enter at the level of last week's low, but last week's low is right there as well. So again, the market doesn't really need to do very much. Okay, personally, what I would do, and all of this trading you're probably getting to realize is all a matter of personal approach. My personal approach would be to actually enter into this short trade, assuming that this analysis is the correct one, at the level of the previous week's low, right down there. Okay, so that's a fairly low level. Round about, it's just above 280, 282 or something like that. Not 280, but 2080, 2080, or 2082, 2084 perhaps, somewhere around about that level. Now, why would I do that? Why would I set a short entry so far below the level of the FLD? Well, because of the reasoning behind entering this short trade. The reasoning behind entering this short trade is that the 20-week cycle trough has not yet formed, and we are looking at trading an F category short trade. That's a bit of a mess over there. An F category short trade for price to come down into this 20-week cycle trough, and I would require a strong move down. And that is why I would set my entry level at a lower level, and I would expect a move a good deal further down. Strictly speaking, if you are purely following the rules of the FLD trading strategy, then I think even if this is going to be an F category short trade, the opportunity is not a very good one. And so therefore you would probably skip over it and not consider this opportunity, and instead look for the next opportunity, which according to this analysis would of course be an A category long trade. So you'd wait for price to come down below the FLD and then look for the long trade bouncing out of it. Or of course you can take my advice and consider the E category long trade on the other analysis. Let's quickly take a look at the euro. I've been speaking about the euro also for the past few weeks, and so let's just speak about what's happened there. First of all, before we take a look at any charts, please make sure you go along to the Hurst Cycles website. Here it is, hurstcycles.com. I wrote a post about the euro called The Struggling Euro last week on Friday, and William wrote a post on over the weekend, a very interesting post indicating that according to his analysis, he thinks that the trough in the euro US dollar still lies ahead of us. So it's not immediately upon us. And of course, all the discussion that I've been having in these videos is based on the idea that the very long cycle trough, the 54-month cycle trough, is upon us, or it should be upon us now. And in my post, I asked the question, why is this cycle here, this 40-day cycle, here is the M shape for this 40-day cycle so far, of course it might still come further down, why is that such a neutral shaped cycle? That's not a bearish cycle, it's not a bullish cycle. If it was the first cycle bouncing out of a 54-month cycle trough, then we would expect it to be very bullish. We would have expected, something like that, as we have seen in the British pound to US dollar. If the 54-month cycle trough still lies a little bit ahead of us, then we would have expected to see a very bearish cycle. Right? We would expect to see the cycle really plunging down, price plunging down. And so I discussed that, and there are some interesting ideas, I think, that I discuss in that post. But now, what do we do in terms of trading it? We still don't know whether that 54-month cycle trough did occur at the end of January, or whether it still lies ahead of us. And in this analysis I'm showing you here, I've pinned the 40-day cycle trough over here, and we have a very broken, very staggered nest of lows, as you can see here. Here's the 18-month cycle way over there. Here's the 54-month cycle circle and whiskers over there. It's a very staggered nest of lows. And so, according to this analysis, we're expecting the 54-month cycle trough to occur around about now. Now, that is possible, as I discuss in my post, and I won't go into all those details. But there is another possibility, which is, interestingly enough, the analysis that is being presented in the Hurst signals analysis for euro to US dollar. And I have received some questions. Why are the analyses that I discuss in these videos not the same analyses that are sometimes shown in Hurst signals? Most of the time they are, but sometimes I present a different analysis in these videos. And the reason is that, of course, we have a team of people who approve the analysis in Hurst signals. And it's not just my opinion. It would be slightly dangerous, dare I suggest, if the analysis in Hurst signals was entirely my opinion, because my analysis is not always correct. I wish it was. Let me zoom in on this chart, and we can have a look at the overview for the euro to US dollar, and I can show you what is slightly different in the analysis in the euro to US dollar. Here's an 18-month cycle trough. That's June 2012, yes, and here's another 18-month cycle trough, which, as you can see, has been pinned. There it is, and that is early in 2014. And so now, according to this analysis, the 54-month cycle trough that I keep speaking about as being due now is in fact only due a little bit later, as you can see, in fact at the next 20-week cycle trough. And so it's over there, which is in, where's that? That's in about June of 2015. So we've still got 3 months to go. Well, we have 20 weeks to go. It's probably the next 20-week cycle trough that will be the very long 54-month cycle trough. Interestingly, that is directly in line with the post that William posted to her cycles over the weekend, as I was mentioning. He indicates that probably the big trough for the euro US dollar is only likely to occur at the next or even the following 20-week cycle trough. And so here you can see the analysis, and you can see the sequence of interactions. There is the 20-week cycle trough on the 26th of January 2015. So we have another 20 weeks to go before the very big 54-month cycle trough. So in some ways it's not really a very big surprise that the current 40-week cycle was not a very bullish cycle. Let's quickly look at the 6-week view. There's the 6-week view. And so here are our interactions. Here's the A category interaction. Here's B as price came back down to the FLD, C as it broke back up above it, and then D. And here is the 40-day cycle trough, and that is expected to form round about now. It was expected to form last week, really, according to this analysis, but it's expected round about now. And so the next trade in the euro to US dollar is an E category long trade, as you can see over here. There is the trading information, an E category long trade with an entry at 113.450. Now, you should bear in mind that, of course, the underlying trend for that is negative, so it might not be a very successful long E category trade. But let's go back to Sentient Trader and take a look at the possibilities here. Now, here is the analysis assuming the 54-month cycle trough hasn't occurred yet. And so here we have either, of course, an E category long trade, according to the analysis we looked at in Hurst signals, or, in fact, this would be an A category long trade, which would be expected to be a very profitable trade as price bounced out of the 54-month cycle trough. So there is the possibility of a very profitable long trade to be taken here. And I would certainly be interested in it, and I will be entering at the level of the FLD, as we would normally do for an E category or an A category trade. However, we need to bear in mind that the 54-month cycle trough in the euro to US dollar might not yet have occurred, and it might only be going to occur at the next 20-week cycle trough, or even the 20-week cycle trough after that. If you take a look at Williams' post, you can see the reasoning behind that. Here is the analysis that has the 54-month cycle trough as having occurred over there, which means that, of course, this is the A category interaction, B as it comes down to the FLD, C as it bounces back up again, D as it dropped down last week, and so therefore E category is next. So as I mentioned, I think that E category trading opportunity is a good trading opportunity. But what if you are still very bearish the euro? And I know many people are, and they're saying they're only expecting the 54-month cycle trough at the next 20-week low, or even 40 weeks from now. There was also an interesting comment to my post over the weekend indicating that perhaps the 54-month cycle trough is behind us. It's already occurred. And so what we're seeing is post the 54-month cycle trough. Well, that's very bearish. So what if you are very bearish and you're not interested in going long at the level of the 20-day FLD? What could you do? Well, if there is still a very powerful bearish underlying trend playing out here, then we can still use the FLDs to our benefit in terms of entering into a short trade. So if you're very bearish, I wouldn't recommend just jumping into a bearish trade straight away today, because we are expecting a 40-day cycle trough to occur round about this week. Okay, there's the nest of lows for the 40-day cycle trough. In fact, you can see I've been sort of generous with it. It might be expected a little bit further into the future, but we are expecting a 40-day cycle trough to occur. So even if you are very bearish the euro, I would recommend that you wait for that 40-day cycle trough to form. Now, if the market is very bearish, so we've got a big, strong bearish underlying trend, draw a big arrow pointing downwards there, we would expect price to bounce a little bit out of the 40-day cycle trough, and it might get to the 20-day FLD. Statistically, in fact, it will almost always at least reach the 20-day FLD following a 40-day cycle trough. So it'll most probably come up to the level of the FLD, at which point, of course, I would be interested in going long, because I believe there is an opportunity for a long trade there. But if you don't, and you're looking for an opportunity to go short, then here is what you could do. You could wait until price gets into what I call the bubble between the 10-day and the 20-day FLD. And so far, that's what this bubble looks like. Wait until price gets into the bubble, and then you could use the 10-day FLD as an entry level for your next short trade. Now, I will watch the euro unfolding, and I'm going to wait for it to come up a little bit towards that 20-day FLD. I'm going to watch the bounce out of the 40-day cycle trough. If it looks like a bit of a miserable bounce, then I might well look at going short again for the euro, and I would probably use the 10-day FLD for that level. Thank you very much for joining me in the Hurst trading room this week. I do hope that some of the discussion wasn't too sort of complex. I'd like to remind you that in the Hurst trading room, I explore the concepts of the FLD trading strategy. I don't necessarily stick to all the rules all the time. If you are still learning the FLD trading strategy, particularly if you are new to it, then I would encourage you to initially stick to the rules, which are outlined in the videos that explain how the FLD trading strategy works. As you become more experienced with it, you can start doing what I'm doing in these videos, which is using the FLD trading strategy as a framework upon which I hang my trading, and I bend the rules slightly, as you will have realized in this video. Thank you very much for joining me. I look forward to seeing you next week, and I wish you profitable trading.